Are you dreaming of that college degree, the one that unlocks your potential and sets you on the path to your dream career? But then the reality hits. How are you going to pay for it all? Tuition fees, accommodation, books, it can feel like a mountain of expenses. If you're exploring your options for funding your education, you've probably come across the term student loans. And if you're looking for a platform that can connect you with a variety of lending options, LendKey might be on your radar. So, the big question is, what student loans are actually available through LendKey? That's exactly what we're going to dive into today. Forget the confusing jargon and endless searching. We'll break down the types of student loans you can potentially access via LendKey, helping you understand your choices and make informed decisions about financing your future. Before we get into the specifics of LendKey, let's take a step back and understand the landscape of student loans in general. There are primarily two main categories: federal student loans and private student loans. Federal student loans are offered by the U.S. Department of Education. They often come with certain benefits, such as fixed interest rates, income-driven repayment plans, and potential loan forgiveness programs. These loans are generally the first avenue most students explore due to these advantages. Private student loans, on the other hand, are offered by private lenders like banks, credit unions, and online lending platforms. These loans can help fill the funding gaps that federal loans might not cover. However, their terms and conditions can vary significantly between lenders, so it's crucial to shop around and compare offers. Now, where does LendKey fit into this picture? LendKey isn't a direct lender itself. Instead, it acts as a platform that connects borrowers with a network of established lenders, primarily credit unions and community banks. Think of it as a marketplace for student loans. This model can potentially offer you access to more competitive rates and terms than you might find by directly approaching a single large national bank. So, what specific types of student loans can you find on the LendKey platform? While the exact offerings might fluctuate slightly based on their partner lenders, you can generally expect to find options for both undergraduate and graduate students, as well as student loan refinancing. Let's break each of these down. Undergraduate student loans. These loans are designed to help students finance their bachelor's degrees or associate degrees. Through LendKey's network, you'll likely encounter private undergraduate loans that can cover various educational expenses, including tuition and fees, the primary cost of attending college. LendKey's partner lenders can provide loans to help bridge the gap between your savings, scholarships, grants, and any federal aid you might receive. Room and board. Whether you're living in a dorm or off campus, these loans can help cover your housing and meal expenses. Books and supplies. Textbooks, software, lab fees. These can add up quickly. Private loans through LendKey can help manage these costs. Other educational expenses. This can include things like transportation, personal expenses directly related to your studies, and even study abroad programs. When considering undergraduate loans through LendKey, it's important to understand some key features you might encounter. Variable versus fixed interest rates. Some loans will have interest rates that fluctuate with market conditions, variable, while others will have rates that remain the same throughout the life of the loan, fixed. Each has its pros and cons depending on your risk tolerance and expectations for interest rate movements. Repayment options. LendKey's partner lenders typically offer various repayment options. These might include making payments while you're still in school, immediate repayment, deferring payments until after graduation, deferred repayment, or making interest-only payments during your studies. Understanding these options is crucial for managing your future finances. Loan terms. This refers to the length of time you have to repay the loan. Shorter terms usually mean higher monthly payments, but less interest paid overall, while longer terms result in lower monthly payments, but more interest accrual. Eligibility requirements. Each lender will have its own eligibility criteria, which can include factors like your credit score, credit history, income, or your cosigner's income, and enrollment status. Graduate student loans. Pursuing a master's degree, doctorate, or other professional degree can significantly advance your career, but it also comes with substantial costs. LendKey's platform typically offers private graduate student loans designed to help fund these advanced studies. These loans can cover similar expenses as undergraduate loans, but often with higher borrowing limits to accommodate the increased cost of graduate programs. Here are some specific types of graduate loans you might find through LendKey's partners. General graduate loans. These can be used for a wide range of graduate programs across various fields. MBA loans, specifically designed for students pursuing a Master of Business Administration degree, often with features tailored to the needs of MBA students. Law school loans, to help finance the high costs associated with legal education. Medical school loans, recognizing the significant investment required for medical degrees. Other professional degree loans, including programs in fields like dentistry, pharmacy, and veterinary medicine. Similar to undergraduate loans, graduate loans through LendKey will have varying interest rates, repayment options, loan terms, and eligibility requirements, depending on the specific lender. It's crucial for graduate students to carefully consider their future earning potential and choose repayment plans that align with their expected income. Student loan refinancing. Beyond loans for current students, LendKey also facilitates student loan refinancing. This is an option for individuals who have already graduated and are looking to consolidate their existing federal and/or private student loans into a single new loan, potentially with a lower interest rate or more favorable repayment terms. Here's why student loan refinancing through LendKey might be attractive. Lower interest rates. If your credit score has improved since you took out your original loans, or if current interest rates are lower, you might be able to refinance to a loan with a lower interest rate, saving you money over the life of the loan. Simplified payments. Instead of managing multiple loan payments to different lenders, refinancing allows you to make just one monthly payment. Different repayment terms. You might be able to choose a shorter repayment term to pay off your debt faster or a longer term to lower your monthly payments, though this could mean paying more interest in the long run. LendKey can be a valuable tool in your search for student loan financing by providing a centralized platform to compare offers from multiple lenders. By understanding the types of loans available, undergraduate, graduate, and refinancing, and carefully considering the terms and conditions, you can make a more informed decision about how to fund your education and achieve your academic